Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about SoFi Technologies, Palantir Technologies, and Nio Stock. In the first article we will be analyzing, it's titled, Buy SoFi Stock, Analyst Says, Sellers Have Got It Wrong. So we'll be discussing how some other professionals and experts have actually misdiagnosed the current market environment and how SoFi Technologies is actually better off than many people actually think. After that, we'll move on and talk about Palantir Technologies pertaining to three big reasons why the share price could surge. Now, for me personally, I do think that this is a very risky growth company, and this is not coming from an analyst that I necessarily respect because I think Luke Lengo overhypes a lot of companies, so I will be adding my own analysis and critiques to his overall article. However, at the end of the day, it seems that Palantir Technologies could be a good stock to hold on to for the long term. Lastly, we'll talk about the electric vehicle maker located over in China named Nio, ticker symbol NIO, and how their share price could rebound and absolutely surge after their next earnings report. So we'll be discussing the latest news updates, price targets, and price predictions, all while we analyze these stocks. So for more videos just like this one, don't forget to go ahead and annihilate that like button right now. Go ahead, obliterate it because it helps me out so much. Subscribe if you are new. Don't forget to become a member of this channel by pressing the join button right next to the subscribe button to help me out for just 99 cents because that's what keeps me here on YouTube. So if you want more videos just like this, don't forget to become a member, and without further ado, let's jump right into today's stories. SoFi Technologies is a fintech company or a financial technology company that essentially operates as a digital bank, and lately the share price has been decreasing ever since a Wedbush analyst decreased his overall rating and price target for the company. He lowered his overall rating twice. Originally, he had an outperform buy rating, which then he lowered to a neutral rating, which then he just recently lowered to a sell rating, which we discussed in the last video. However, now a Mizuho analyst is firing back saying that this Wedbush analyst does not know what he's talking about, and this particular professional who says this Wedbush analyst is incorrect has a better argument regarding how the sell-off is wrong and how SoFi Technologies should be appreciating in their overall share price, not depreciating or decreasing in their overall share price. Now, just like the negative Wedbush analyst, this Mizuho analyst does highlight and notes that SoFi Technologies has experienced a notable slowdown in their overall loan sales during the quarter, and this in turn has investors worried regarding how SoFi may not necessarily mark down the value of these loans or be able to pass them off, which could prevent them from achieving profitability this year, which was originally projected. However, I do want to add how the chief financial officer of SoFi Technologies is confident that SoFi will be able to settle loans where they are currently marked. And this is the exact evidence that the Mizuho analyst cites regarding how SoFi stock is still a buying opportunity, and he has not budged from his overall rating for the stock since late 2021. He says, and I quote, "Bears are mathematically and intellectually off. Buy on weakness," end quote. He's essentially communicating to investors that other experts, professionals, and analysts are misdiagnosing this company and the overall general stock market, and he believes SoFi will become profitable at the end of 2023. However, there is something that you as an investor need to be aware of. If SoFi does not hit net income profitability in 2023 as expected, the company may choose to raise additional capital in the form of equity or debt by issuing more shares or taking on loans. And this is what the Wedbush analyst cited, which backed his overall downgrade for the stock. However, this Mizuho analyst says it's very unlikely for them to issue more shares, thus diluting shareholders, considering that the market capitalization has already fallen for this company. But overall, he does believe that this won't even be a requirement because he is confident that the company will achieve profitability by the end of 2023 or the beginning of 2024. So although analysts remain divided on this company, while the Wedbush analyst has a price target of only $2.50, this analyst clearly has a higher price target, while my personal price target is around $8 for this company until they become profitable, and that's when the overall share price is set to surge. So I would love to hear your thoughts down below regarding how both of these analysts clearly do not see eye to eye on SoFi Technologies and which one you agree with. For me personally, I am more leaning toward the bullish positive aspects of this overall company because I do think they will achieve profitability especially as the overall stock market becomes more bullish and positive. But I would love to hear your thoughts down below. Next, let's talk about Palantir Technologies, which is a big data and analytics company which serves both commercial enterprises as well as government clients. And this particular analyst has cited three main reasons why Palantir stock will fly higher. Now, the reason I don't like this analyst is because he makes claims and statements that are completely fundamentally unfounded, because it seems that he overhypes companies, and I don't want investors to be led astray by what somebody says just because they are in a position of power. This is why it's paramount that you always make sure to do your own research. Palantir has not had the best track record, considering that they couldn't catch much of a break throughout the year of 2022 and some of 2023, and it didn't matter what the company did, good, bad, or ugly, it seemed that the share price continued to fall lower. But after their very impressive earnings report and becoming profitable, it seems that some investors, and especially professionals, have changed their mind on this overall company, to where this article cites how Palantir could surge by more than 100% over the next 12 months. So let's see what evidence is provided for this truth claim. The first reason that this analyst believes that Palantir could double in their overall share price is he believes that based off of the company's technical analysis and the overall metrics, this company is set to surge. He cites how the chart shows that this company is very bullish and positive regarding how Palantir has retaken its 200-day moving average, and that they have recently broken above their 2-year downtrend resistance line that the share price has filled at 4 times before. And although on a technical analysis basis, yes, that is positive, that doesn't necessarily mean that the company is going to surge or double in their overall share price. It just means that this resistance line or ceiling that was broken now operates as a new support level for the stock. So I really don't understand his perspective on this, but I would agree with him that this is a positive development pertaining to how Palantir's share price seems to be starting an uptrend. His reason number 2 is that Palantir is too cheap for its own good, and this is where I actually disagree with him. I actually think that Palantir is somewhat overpriced, considering that they are trading at 10 times their overall sales, and their current CAGR in regards to the revenues are not high enough to justify this PS ratio. So I personally do think that Palantir is somewhat overvalued, but if you are a long-term investor, eventually the company's financial metrics will catch up to their current share price, and then beyond that point, you could have a very lucrative stock on your hands. Lastly, I'm going to agree that their margins are very impressive, and it's probably the best reason for a breakout for this overall company, considering that they are also supposed to be profitable for this entire year. He believes that the Palantir share price, or the PLTR stock price, will soar in 2023 by expanding their overall margins due to their best-in-class high-demand products. And he cites how everyone knows that the company will grow between 20 and 30% over the next several years, which is only sort of true. This year, at least, they're supposed to bring in less than 20% in their overall growth rate, and then from this year onwards, it's going to be around 20 to 25%. And this is due to change to recent earnings reports. So again, I do think this analyst is overhyping this company to a degree, and thus misleading investors. We need to be realistic, smart, risk-averse investors if we want to make money over the long term. Now, what I do like about this company is that their management is prioritizing profitability. They are cutting costs left and right, and they are expanding their overall profit margins to become more profitable on a GAAP basis. And they are set to continuously be profitable on a generally accepted accounting principles basis through the entire year of 2023, which is extremely positive. So for this stock, I do think that this particular author is overhyping Palantir Technologies, which is something that investors need to be aware of. But overall, I do think Palantir is a good overall company to hold in your portfolio if you are willing to take on this extra risk. You're buying it at a premium, and if you're planning to hold this for the long term, you are betting that the company's financial metrics will eventually be comparable to their market cap, earnings, and sales, and then from that point onwards, the company is set to surge and really be a lucrative investment for you. But please do stay away from people who are overhyping companies, particularly SoFi Technologies and Palantir Technologies. We really need to be realistic about these companies, which is why I only have a 4% allocation to SoFi Technologies and a 3% allocation to Palantir Technologies. Lastly, let's talk about a company that really doesn't get a lot of love, which is Nio, ticker symbol NIO, which is an electric vehicle company located in China, which is set to rebound. I've made many videos on Nio, and my original prediction, which still stands, is that the second half of 2023, specifically after their third earnings report, that's when this company will truly start to appreciate. Right now, they're trading just above $8 per share, which is a fantastic fantastic entry point, especially if we look at their overall PS ratio, where they are trading at just 1.8 times sales, meaning that Nio, on a price to sales ratio standpoint, is over 5 times cheaper to buy in this regard than, say, Palantir Technologies. So let's take a closer look regarding why Nio can break out during the second half of 2023. Well, the first reason which was cited is that deliveries will improve. Sometimes the best time to buy stocks is when they are experiencing weakness, but if the company is fundamentally solid, it will rebound and surge, which is exactly what I think will happen, and here's why. First off, we know that their production is set to ramp up significantly, which will reflect their overall revenues. This is why analysts are projecting how Nio's revenues for the second half of 2023 will surge from 4.3 billion in the first half of the year up to 7.3 billion during the second half. And this is clearly due to production deliveries, which once this earnings report actually comes in, this is going to really benefit investors and their overall share price. The second reason why we can anticipate a surge in their overall share price is a shift towards electric vehicle sedans, or as they're known over in the UK, also known as the United Kingdom, they are called saloons, and they are extremely popular over in China, which is where this company is headquartered. They already have the ET7 and ET5, which they are set to increase production for these specific sedans and lower their overall SUV production and their expenses for those. The reason they're doing this is that they have found that the Chinese market really values sedans, which is why they saw an increase of around 74% in April for this type of product. That's why Nio has been developing its strategy over the past few years, and they are willing to put more emphasis and money into their sedan segment rather than their SUV production. Now, the big problem with this company is that they are not supposed to break even until 2026. So this company is far away from making profits. Originally, they were set to become profitable in 2025, but that has since moved due to China having various lockdowns and extremely tight and risky rules. But if everything goes as planned, this company could break even as soon as next year regarding the end of 2024. So Nio's future is extremely volatile and up in the air, and it just depends if their management and their overall company can make good on these overall projections. So Nio is expected to generate a total of $17.6 billion worth of revenue next year, making it one of the best and most lucrative Chinese EV companies, especially compared to Li Auto and XPeng, even though arguably this is very strict competition for Nio. But considering that they are very cheap right now, the company is set to improve dramatically over the second half of 2023. These catalysts are going to operate very effectively in increasing their overall share price, but always make sure to do your own research. Overall, this is a phenomenal news update for SoFi Technologies, Palantir Technologies, and Nio Stock. So for more videos just like this one, don't forget to go and annihilate that like button if you haven't already. Subscribe if you are new, especially if you want more videos like this one, and don't forget to join and become a member of this channel so you can support me personally for as little as 99 cents so I can stay on YouTube to make videos just like this for you. And with that being said, I will see you in the next one.